Hi, my name is Jayaprakash Toshniwal and I'm currently working with LIC Mutual Fund for last 3.5 years. In total, I have almost 14 years of experience in equity markets where I covered on the sell side as well as the insurance companies, buy side, and now in mutual fund industry. In history, I have looked into various multiple sectors and my expertise lies on BFSI, auto and metals. At LIC Mutual Fund, I'm managing Balanced Advantaged Fund which we launched in November 2021. This fund is predominantly based for a model based. It is driven on the two fundamentals of the Balanced Advantage Fund, where a fund as a category has to give a lower volatility with a reasonable higher risk adjusted return. Our Balanced Advantage Fund is basically hinged upon two important variables in the economy. One is the interest rate and the second is the forward earnings. When we talk about interest rate, it basically factors into account most global events like interest rates, global macros, domestic macros. And when we talk about forward earnings, it basically takes into account the equity market valuation, which is basically on a 1 year forward PE basis. This fund was designed to keep an asset allocation pattern, so that's a very fluid asset allocation, and since it's a model base, it doesn't have any subjective or biasness of the fund manager involved. We target this fund for investors who are risk averse, who are just want to test the market, he just want to graduate from a debt asset class to a mutual equity asset class, want to test the product, they are risk averse at this point of time and want to explore the investing in the mutual fund side, on at least on the equity side. This fund is predominantly again a very fluid asset allocation model. Historically and by research we have seen that a large part of approx 90% of the returns in any funds are explained by the sector allocation as well as the asset allocation of that fund, and that's what we are here to achieve it. The fund is basically a mix of equity, debt and cash money market as such. While equity is predominantly based on NSE 100 stocks, where we are trying to have a lesser risk for the investors as such, because we are predominantly focused on large cap. Someone who's coming with a risk averse are not exposed to certain market cap risk of the small cap or the mid cap treasuries. As well as on the debt side, the fund is predominantly managed by a very liquid government securities as well as the high quality assets. So we are not building any credit risk in this fund. And remaining the as since this is while this is an equity classified fund, we have kept this as a tax break. We have kept minimum gross equity exposure of 65%, so that it helps into the tax allocations also for the investors. So because basically equity investors get the tax allocation. Our equity range in this fund is based 10 to 90%, where we keep on changing between the asset allocation based on the market performance, market valuations, and the interest rate valuation. So this fluid range of 10 to 90% help us to manage asset allocation. Like whenever the market are very expensive, we probably reduce from allocation to lower level, so that whenever market goes down, we have a more room and opportunity to increase our weight, and consequently when market goes up, we can able to book larger profit. So it's basically the fundamental principle is basically buy low, sell high. That's all is very good for investors probably who are looking again for very risk averse investors, uh, and looking for a reasonable longer tenure return in this fund. Thank you.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.